What's going on, everybody? This is Peter with Lucci Crew coming in at you with the Sunday market outlook. So let's go ahead and check back what the hell happened last week. We actually were able to get some pretty good short moves actually on, let's see, Wednesday into Thursday with some follow through gap down into Friday. Obviously after the jobs number was a disappointment. Overall, again, we were able to test the levels we talked about the week before. That 155 on the SPY. That's the spot for the SPYs. Our big trade from last week was this LinkedIn. We were able to snag that for about $200,000. Really great trade. This thing was setting up on the tape really, really easily. Some other things that broke down that were quite surprising. This Google was actually able to make it under 800 and hold under the day after, actually. So there was actually some follow through here. Apple continued lower. Obviously, we got under 440 pretty easily and even hit all the way down to 419 on a Friday. This is very rare to see Apple actually make a solid move on the alpha side. Overall, guys, I was starting to lean a little bit on the bear side once we broke the 155 and then we had the gap down. I thought that was going to be the catalyst going into it. But one thing to remember is that, again, you have to look at what's going on under the hood. We were able to see that Bank of America, Goldman Sachs, JP Morgan, all that kind of stuff, they really, really rebounded on Friday. We're talking about JP Morgan opening at 46 bucks and closing at 48. Bank of America going from a low of 1160 all the way through 12 bucks. 12 bucks has been a big place for her. Citigroup, this was monstrous, all the way from 41.65 up to 43. This overall indicates to me that this was actually a setup for the bears, for all the retail guys to get kind of scared, show the pullback, get some shorts stuck in there, and this really, really squeezed. In the morning, there was not very much follow through for the short side. Unless you had the single names like Netflix or Google or Apple, the rest of the complex was looking good. The banks all held up, and as we spoke last time in the Raging Bulls Sleeping Bears webinar, on this Friday, this past Friday, we were looking for the gap down to buy the dip because again, we're looking for that setup. What I could possibly see going into the future here. Obviously, I'm not freaking Miss Cleo or anything, but if we can continue to hold this 155, that pullback might have been the dip buy for a swing right back up into the all-time highs. Okay, I can definitely see that happening. Again, it's because of these financials. They've been holding up relatively well for us. And even with the disappointing jobs market, it was still a dip buying opportunity. All right. Again, 155 is the area. If we chop back and forth there, really, just relax for a little bit and don't push yourself in different trades. Okay, it's really important to know that this bull market has been a pain in the butt for bulls and for bears. Okay, this is not a good market for either side, really. Okay, it's only good for scalping, riding, and if you can figure out on the tape where your best trades are. So one thing I want to make sure that you guys see is that we are starting our classes tomorrow. I'm really psyched about it. We got a good crowd of people coming in. Tuesday we're going to have a webinar. Which is going to be the LinkedIn trade. We're going to talk about that a little bit more. And on top of that, I also want you guys to make sure you check out the Lucci Scholarship. You can send in a miniature resume or something telling us a little bit about yourself or why we should give you access to some of our content that's usually for premium members. But overall, guys, getting back to the markets, really I want to see a little bit of follow through to the upside through these banks, just to show continuation on the bid. And for bears to really roll over in terms of showing the strength in this bull market. Other than that, 155 is the level. I want to watch out for Apple, guys. This thing has been a short the rips player for a long time, and everybody was not expecting the 420. I explained this also in the bulls versus bear webinar that I'm gonna look for Apple under 400 relatively soon here. And again, the yearly lows, I would say even 52-week lows was 419. Okay, we are touching that area right there. We could see serious droppage under 400, but after that, we're going to be looking for a snapback. Okay, make sure that you keep these on watch. Watch your Googles, watch your price lines, and watch your high beta movers because they are really going to help lead the stock and give you a little bit of a tell how the markets are doing. So again, guys, check out our classes, check out the webinar that we have on the LinkedIn trade coming up, and also the St. Lucci Scholarship. All right. Thanks, guys, for attending, and I will see you on the flip side.